What's up guys, welcome back to the channel. My name is John and this is John Paul Investing. Just like human survival, companies must also adapt or face expiration. In the mid-2000s, Netflix and other competitors were already beginning to eat away into Blockbuster's profits, not by undercutting them, but by reimagining video rental in the digital age. On July 1st, 2010, Blockbuster was delisted from the New York Stock Exchange, and the reason was clear as day. There was simply a better way to rent and watch movies. Just go to Netflix.com. Netflix was willing to embrace change. Netflix wasn't afraid to fail or try new things. They were simply being opportunists. Netflix was willing to reinvent and disrupt itself. Netflix even adopted their own corporate culture very early on, and above all, they were willing to take risks which might affect profitability for the sake of helping them stay ahead of the curve. This kind of industry reimagination is what made Netflix the powerhouse it is today, and other companies like Kits have taken this as example. Kits is a company that I've already spoken about on this channel, and I wanted to bring them up again and provide some updates for you. The co-founder and CEO of Kits Eyewear, Roger Hardy, understood very early on that many services today are now accessed with the simple click of a finger. And because of this, Kits has a plan to consolidate a predominantly fragmented eyewear industry of mostly mom and pop businesses into an online, easy-to-use platform. And unlike retail, they won't have to face against the heavyweights like Amazon or Walmart, luckily. They just have to make attaining customized eyewear as easy as the click of a finger. They just got their DTC eligibility so they can trade more easily on the over-the-counter markets. But a really important aspect of the DTC eligibility is it is going to increase the company's stock trading volume. Just recently, on June 7th, Kits announced their delivery of the first 100,000 prescription eyeglasses faster than any other eye care brand in history. They were able to ship 100,000 prescription eyeglasses within a year of establishing their new state-of-the-art optical lab. If you already watched my other video on Kits, you will remember that they have a essentially vertically integrated eyewear business where they are able to actually produce the glasses on site and ship them all in-house without having to rely on any third party, which makes the process of ordering and shipping the glasses much faster than their competitors right now. Usually when people think of vertically integrated, they will think of Tesla, and for them it's working really well because they're able to pretty much make all aspects of the car themselves and, ship them out. Well, in this case, we are not talking about cars, we are talking about prescription glasses which are tailored to specific eyeballs that need them. Kits is one of the highest caliber companies in Canada, and it is a pleasure to be able to present them. This video is sponsored, and I wanted to thank my sponsors for allowing me to talk about them once more. The founder of Kits, Roger Hardy, is a passionate businessman with previous billion-dollar exits. Referring to the previous video I made once again, he founded Clearly and Coastal, which were the world's largest omni-channel retailers for eyewears, which he then sold for a ton of money. So with this, he's leveraging the experience that he got from those two previous eyewear retailers and is using that to create and expand upon the Kits business that he's working on today. And the numbers are not lying. Their auto ship subscriptions have continued to rise year over year as of today, along with their glasses delivered, which have doubled quarter over quarter compared to the last quarter of 2020. And this is in tandem with the US eyewear market, which is growing by size from around a $26 billion market in 2017 to an over $50 billion market by the year 2028. You have to remember though that the distribution channel for eyewear is still fragmented because again, there's a lot of mom and pop brick and mortar businesses that people still like to use but don't really understand that there is a better solution now. Right now, e-commerce accounts for less than a quarter of all global eyewear market revenue, and this number is only expected to increase as time progresses. If we go on Yahoo Finance, we will look at the revenue estimates and see that the current year 2021 is expected to see a sales growth of at least 30%. Of course, these are estimates and they are not set in stone. There are a lot of factors that could go into these figures, but it is likely that Kits will reach these figures and possibly break them. Now, the Kits Eye Care stock ticker symbol for the OTC markets is KTYCF. They are currently trading below their IPO price of $8.50 Canadian, currently at $6.17 US dollars. Analyst Matt Coranda at Roth Capital and analyst Derek DeLay at Canaccord Genuity, if we were to average both of their forecasts for Kits Eye Care's stock price, we will come to around 100% increase in their stock price today. This would mean around a $15 Canadian dollars stock price for kits, or around a $12 to $13 stock price in US dollars. And these figures are based on extensive research done by both analysts. We believe Kits is well positioned on the precipice of what will be an acceleration of the penetration of e-commerce within the retail eye care markets. Kits operates a unique 100% online-only business selling both private label and well-known third-party branded contact lenses and eyeglasses. While the eye care market is highly fragmented, only 13% of eyewear sales in North America during 2020 were generated through online channels. This is well below other discretionary retail categories, which tend to have online penetration of 25 to 35%, a gap which we expect to close over the course of our forecast period. We believe Kits offers investors an attractive exposure to the highly fragmented, high-margin eye care market. The company's unique 100% online-only business model should allow Kits to exceed the average industry growth rate, as e-commerce eye care penetration is set to accelerate in our view. The company is run by a seasoned management team which together owns 74% of the shares outstanding and has demonstrated prior success in the online eye care market. We believe the current valuation of 1.3 times our 2020 estimated revenues versus their peers, which trade at 2.9 multiples, represents an attractive entry point. So if we get all of these positive figures that Kits is receiving, their revenue figures going up, subscriptions going up, eye care going up, total sales, everything is essentially going up and to the right, we can come to an early conclusion that it is likely Kits will continue to keep growing as long as nothing entirely fundamental in e-commerce changes, which I don't see happening anytime soon, if at all, meaning that Kits could be a potentially huge growth potential stock to have in one's portfolio. I would say that you cannot turn a blind eye to Kits because there's a lot of positive things going on for this company that I would not really look over too much. And it would be very ignorant to just ignore it altogether just because it's eyewear. Me being someone who uses glasses, I could be a little biased, but buying glasses online has been a awesome process for me as far as my experiences. The process is, way easier, way simpler as long as you have your prescription. Again, I'm being biased, but guys, do not sleep on Kits. You guys have to take note of them. The stock ticker for them, once again, is KTYCF on the OTC markets. Let me know what you think about Kits as a company in the comments below. Anyways, guys, that is it for this video. Thank you guys so much for watching and making it this far into the video. If you like this video and would like to see future videos of mine, go ahead and hit that like and subscribe button. And don't forget to hit the bell notification to get notified when I make videos just like this one. Thanks again, and I'll see you in the next video.